Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Welcome back to the show, Rick.
Thanks for inviting me on, Jim. It's always a pleasure.
Rick, the G20 meeting coming up on the weekend. What's the U.S. strategy?
That's everybody's wondering the same thing. You know, Trump is so all over the board here, and now, you know, he's got us thinking that he's going to somehow negotiate with Xi Jinping and come out with a trade deal. But I think we've gone so far down the road with China in the wrong direction that I don't see much of a deal happening. And other than that, it's like, what do those guys have to do? What do they have to talk about? So it's really a trade deal or not. There's not much else that can come out of this session. And you know, when I talk about U.S. going so far down the road the wrong way, I mean only specifically with respect to the possibility of some trade deal. But I'd have to say I'm on board, as are many Americans, with some of the ideas that Trump has been pushing. Most recently with the ban against, exporting components for Chinese supercomputers, and also some severe restrictions on the way Huawei operates. You know, the Wall Street Journal can get its dander up about how this infringes on free trade, but the same paper, the Wall Street Journal, they better go back into their archives and see the story they did 3 or 4 months ago about embedded spy chips in some of this Chinese equipment. There's no question that they are hoovering every little technical trick and secret and patent they can from their ties to U.S. companies, and you know, they cheated everything else that they're doing in trade. So you kind of come to the point of agreeing with Trump, even if it goes directly against classical economics, to set up tariff barriers.
If he does implement more tariffs against Chinese goods, what's the cost going to be to American consumers? Doesn't it amount to
hundreds of billions of dollars? And you hate to see the farmers taking the brunt of it, but they are. It's not like farming isn't difficult enough already, and that's why, just in this one rare instance, I'd be totally in favor of diverting some taxpayer finance subsidies to the farm business. I mean, those guys have been taking it on the chin for so long, for so many reasons, that they deserve a break.
And of course, in Canada, China has asked Canada to suspend meat exports. They've already stopped importing Canadian canola. It looks like China likes to use their big economic hammer when it comes to political issues. They want that Huawei executive that the U.S. wants extradited from Canada released. And until that happens, Canada is paying a huge economic price. Does this show the dangers of doing business with a communist state?
Not just a communist state, but in the case of Iran, a terrorist state. You know, Trump is really pushing the envelope here. It's been a long time since we have had a president who did anything but kind of maintain the status quo. And Trump is definitely rattling a lot of cages here. None of us knows how these things are going to turn out. His perception of Iran, obviously, is that its position is weaker than it makes itself out to be. And up to this point, if you were watching this poker game, you would not think you know clearly who the winner's going to be.
Is that one of the reasons why the price of oil has been going up, the possible conflict with Iran?
Well, that's in the context of a longer-term downtrend, and to me the surprise is that with Iranian attacks on non-U.S. oil tankers in the Persian Gulf, and all the I won't even call it saber rattling. This is the real deal. I mean, this is a real confrontation. I'm surprised oil prices haven't gone higher.
Is that because there's just such a diverse supply of oil available? It's not just the Middle East anymore. Canada and the U.S. can really crank it out.
Yeah, the supply is fungible, and if there's some embargo on U.S. imports of Venezuelan oil, which, probably not even exporting much of it at this time. But if the supply doesn't come from one source, it'll come from another. And the Russians have done a pretty good job holding OPEC in line. But at some point, even the Russian will to do that breaks down because they need the revenues too.
We'll have more with Rick Ackerman right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Rick Ackerman. Rick, gold has had an interesting skyrocket. Is this going to continue?
I think so. I use what I call hidden pivot targets, and from about a month ago, I had a target in August COMEX gold up at 1412, and it has blown through that target decisively, meaning that the target of a pattern of larger magnitude is at work here. So I think gold's going to go higher. I'd be surprised, though, if we don't require a consolidation maybe over the next 3 or 4 weeks to get bullion in shape for another run-up. But just the mere fact of the August futures contract having exceeded such a clear target tells me that the buyers are not yet spent.
What's behind the upsurge in gold?
Well, you've got a couple of big things in play. One is that interest rates have come down, and this goes very much against expectations of 6 months ago or a year ago or 5 years ago or 10 or 15 or 20 years ago, other than those periods when the Fed was actively loosening. So it's kind of a surprise that yields are going lower. They're basically saying, don't look at the U.S. stock market for clues about the economy. Look at interest rates. And the interest rates are saying they are discounting what looks to be an unstoppable slowdown in global trade and global output. So let's just say that the bonds have it right and the stock market has it wrong. But the stock market is being fed, as we know, by an inexhaustible source of easy money. It's become kind of a perpetual motion machine. So gold definitely benefits from that. But also, and this is something I wrote about a few weeks ago, there is the perception that regardless if we get a Democrat or Republican in the White House in 2021, we're going to have a huge fiscal blowout. The Republicans have shown no inclination to rein in spending, and if you pile on top of that the aspirations of lunatics like Bernie Sanders or even Elizabeth Warren, Bernie's starting bid just on loan forgiveness is $1.5 trillion, and of course there's free Medicare for all, and there's the guaranteed wage and this and that. So even if they were to enact just 10% of that, that would be tantamount to a fiscal blowout. So I think gold sniffs that too. It's like no matter who wins in 2020, there'll be a lot of free goodies on the table.
What's your outlook for the U.S. dollar?
I've been long-term bullish and remain long-term bullish. The dollar index is trading in the mid-90s, but I see it eventually going to 120 to test highs that were made at the beginning of the millennium. So, but more immediately, the dollar has sold down pretty hard, but I think it's due for at least some sort of technical rally, and that's what I've been looking for as of a few days ago. I don't know whether we've had quite enough lift so far to get the dollar out of the corrective danger zone, but I think we're going to see a bit of a rally in the dollar index from here, maybe up, currently trading 96.09. I think we could come up to at least 97, 98 before we might see another leg down.
And why would the U.S. dollar be climbing right now?
Well, I try not to delve too deeply into the reasons. I look at the charts, and it gets really complicated, as does crude oil. You know, when you try to figure the whys and the wherefores of crude oil's ups or downs, it's really too complicated. And I think the dollar is the same way. The dollar is not going to go out of style ever because the world demands a currency that is in infinite supply, and that's the dollar is the only one that meets that criterion. But long term, I've been bullish on the dollar simply because I am a diehard deflationist. And what that implies is that somewhere down the road, all these debts that everybody would like to just go away, the student debt and mortgage debt and everything else, I think it's going to settle on the side of the lenders. And meaning we're all going to pay it back. In the case of mortgages, we're going to see mortgages rewritten essentially as lease agreements. And that's very deflationary because it implies that we'll be paying back those dollars the hard way. So I think that to sort of back my way out of the logic of that, or to back it out, I see a stronger dollar simply because it is the best way for the natural law to visit the pain and suffering on borrowers that's going to be required to bring things back into a semblance of order, to bring back rationality into borrowing and lending.
With so much money owed to so many by so many, could we someday see something that used to happen when royalty, when a new king came in, they'd forgive debts and they'd start at zero all over again? Is that possible, or could that happen?
I'll tell you why that can happen. Just let's say you're a mortgage borrower and you owe another $240,000 on your home. Do you actually believe that someday the potentate, vizier, the king, the emperor is going to say, okay, that debt is forgiven? When you examine deflation, not as in the stupid way that the monetarists do about inflation being an increase in money supply and deflation being a decrease, that's a lot of bull twaddle. That tells us nothing because we don't even know what money is anymore, much less how to measure it. So you know, in the instance of forgiveness, no debt is forgiven. I mean, if the borrowers don't pay it, then the lenders will. So we're going to pay it one way or the other, and that's why I think that the calculus of deflation leads inevitably in that direction. We're just not going to skip free and go naked, nor will you or I have the opportunity to peel a couple of $100,000 bills from our wallets to settle our mortgages. It's just not going to happen.
We'll have more with Rick Ackerman right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold, Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, are we in another wave of Bitcoin mania?
Indeed we are, and as I've seen it evolve or gestate, it's hard to figure really. I think what it is that the dirtbags at the highest level, the banksters, are greedy enough to want to get in on the action, even though they've seen the players in the first round really get burned. And I think merely by announcing their presence, some of these big international banks, they're thinking they're going to make it safe for everybody if they themselves are involved. So Bitcoin does not yet have it's gained somewhat in this stamp of legitimacy part of the life of Bitcoin, but what's happened so far is outlandish. I mean, it's gone from the 3,000s to every time I look, when I update my own forecast for Bitcoin, I have to change the 1,000. It's 11,000, then 12,000, then we're butting up against 13,000. My current target, I readjusted it today, is it's 21,060, I think it was, or somewhere just above 21,000. And just from a purely technical standpoint, using my own proprietary system, what I call the hidden pivot method, I don't see a remote chance that Bitcoin's not going to get at least to 21,000 and change to that target. Currently trading, holy smokes, 13,464, up $1,222. And, if you're a perma bear, you like to think, well, this is the bell that they said does not ring at the top. We've got so many lunatics and greedy shysters in the Bitcoin game, that this is definitely going to be a top, but these ridiculous tops can be toppy for longer than we might care to imagine.
Does Bitcoin now seem to have a particular pattern? Because I remember when it peaked out last time around 20,000, because it happened on my birthday 2 years ago, and everybody at my party was saying, "Oh, do you have your Bitcoin? It's terrific. It can't lose." And I thought anytime something's being chatted up at a party, it's probably not the time to get into it.
Well, it's a little bit different this time. I'll tell you what the big difference is with respect to the speculative excesses that have frothed up so quickly. The main thing is that you don't have a lot of pishers, little guys, just sitting on Bitcoin that they own from $3.47. In this run up, you don't have the pikers, the little guys. Everybody in it was in it from at least $3,000 per Bitcoin. So, we're probably getting a lot of buying as it goes up, so that whatever buying there is to support this rally, it's new money getting in at real money, $5,000, $8,000, $10,000, $11,000 per coin. So there's real skin in the game this time, meaning that all of the supply held back from the market from greedy little pishers before who thought, that their $3.50 investment or $60 investment in Bitcoin was going to go to, who knows, 100,000. So they're not in the game. We've got bigger players here, real money, and that's why I think it's the phony stamp of authority that all the bankers are trying to contribute to Bitcoin to make it go.
What about Facebook's move to create its own cyber currency or cryptocurrency?
Well, Facebook has a difficult row to hoe there. They're beleaguered really where privacy issues are concerned, And I don't think you can possibly ascribe benign motives to Facebook for getting involved. You know, to me, the temptation for Facebook to use to enhance Bitcoin's value with its own brand is too much. It's Facebook has made all its money collecting information on 2 billion subscribers and selling them out, as I wrote recently, 6 ways of Sunday. So for Facebook to take a supposedly disinterested position in Bitcoin through it's another separate company as a banking intermediary is stretching credulity. So they do have a lot of hurdles to clear, and it's no guarantee that they could even, everybody thinks that Facebook knows its own turf so well that it could remedy one of the major problems with Bitcoin, which was the transaction costs were relatively high. They were prohibitive for Bitcoins ever becoming a medium in small transactions. And Facebook may seem to have the answers to that, but I'd like to see the proof first.
Lower interest rates are expected. Is that going to create a housing boom?
It's certainly triggered a mania on refis, but the problem here is that home prices they're going up, up, and up, and up. And, you used to be able to buy a pretty decent home for $20 or $30 million, but not in New York anymore. I mean, to be a player there, anything above the 6th floor, you got to cough up $40, $50, $60 million or more. And so those who are already in their homes haven't lost time refinancing down to insanely low levels. I don't know what the 30-year rate is, or for that matter, the 15, but you can basically refi, and this is going to have a liquefying effect on consumption. It definitely refis definitely put money into the economy, and this is a great opportunity for people who are in over their heads to get in less over their heads temporarily. So, but again, I don't see a housing boom simply because the prices are out of reach for first-time buyers. In
Canada, in Vancouver and Toronto especially, high-end real estate has just plummeted in price. Properties that were worth $14 million selling for $9 or $7 million now. Although, if you look at when some of those properties were bought, they probably still made money on it. Any sign of a slowdown like that in the U.S.?
Well, the New York market has actually cracked. We're still seeing some of these insane prices, and even news of spec construction in Lotus Land there in Hollywood. I've seen a figure as high as $500 million for a spec house. But I think the market is cracking. That has already occurred in the Bay Area. I hesitate to say this is it. This is the big one, the final comeuppance for, the Bay Area. I lived there in San Francisco for 22 years, and I regret having avoided the housing market. I always used to say, I'll buy if prices come down enough, and they never did. There was always insane heights, and then a plateau, and then on to even higher insane heights. So sooner or later, the Bay Area will it's going to implode, Bay Area real estate, but that will be simultaneous with the collapse of the tech stocks, which support the mania.
Rick, anything else you wanted to chat about today?
Well, I think we've covered a lot of territory, Jim. You always ask great questions that lead me to interesting places. I do think that this bull market is it's nutty, and there's so many things piling up against it in the way of slowdown in China and Europe, and this lower and lower interest rates, things like that. It's crazy, but my targets for the Dow at this point go all the way up to 33,161. Again, I'm using my own hidden pivot method. The Dow is currently 26,616, and I'll just give you three numbers to look at. I think there'll be a pullback from each, but each could conceivably mark the top of the bull market. The first is 27,436. The second is 28,738. And the last of them, as I just mentioned, is 33,161. That's as high as I can see. So again, 27,436, 28,738, and 33,161. And those numbers will be confirmed when we see a pullback from each, which is what I'm expecting.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim. Thanks for inviting me on.
And have an enjoyable July 4th.
Thanks. I'm looking forward to it. A lot of good fireworks displays down on the Florida beaches here.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He was speaking to us from South Florida. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.